The Sunday Times tax list has crowned Betfred founders Fred and Peter Done as the UK's biggest taxpayers, with an estimated £401 million of tax paid in the last year. My name is Jack Reevers and welcome to this week's episode of Tax Tidbits, where the tax return deadline has officially passed and we can now compare the tax paid by the wealthiest individuals across the UK. Celebrities like Harry Styles, Anthony Joshua and J.K. Rowling also feature amongst the top 100 taxpayers. The list reveals a total £5.758 billion of tax paid by the group, a big increase on last year, thanks largely to higher corporation tax rates. HMRC is clearly having a good year. Harry Styles was actually a new entry with a £24.7 million bill. J.K. Rowling paid £47.5 million and Anthony Joshua just squeezed in at number 100 on the list with an £11 million bill. The list now mixes pop stars and footballers with pub bosses and traders, proving that in the UK, fame, fortune and a hefty tax bill often go hand in hand. About 1 million people missed HMRC's self-assessment deadline for their 2025 tax return and are now facing an automatic £100 penalty, proving once again that procrastination is not a recognised tax strategy. Nearly 500,000 returns were filed on the final day, with more than 27,000 people panic-clicking submit in the last hour, making Saturday evening HMRC's busiest period despite extended helplines and web chat services. While about 11.5 million people did get their returns in on time, those who missed the cutoff could see penalties snowball with daily fines, extra charges and interest if they keep putting off their return. HMRC says it will listen to reasonable excuses, but experts' advice is simple. File ASAP, pay what you can, set up a payment plan if needed, and definitely don't bury your head in the sand and hope that HMRC forgets. A hair loss business, Mark Glen Limited, has successfully convinced the upper tribunal that its Kinsey hair replacement system should be zero rated for VAT after HMRC tried to slap them with £277,000 in backdated taxes. HMRC was trying to argue that hair loss isn't a real disability in itself, and so the hair replacement system should be subject to that. But the upper tribunal disagreed, saying that severe hair loss in women can count as a disability when you factor in the social stigma and day-to-day stress it causes. Plus, the Kinsey system was deemed a proper adaptation of goods because it's custom fitted, not a one-size-fits-all wig. This overturned an earlier tribunal decision that had dismissed hair loss as purely cosmetic and not a qualifying disability. The case highlights how finely balanced VAT rules can be, and sometimes it's all about splitting hairs. Literally. Good news for small businesses and micro entities. You can breathe a little easier because you won't have to file your profit and loss accounts with Companies House from April 27, at least not yet. The government has hit pause on the plan, saying it's still reviewing the changes to balance cracking down on economic crime with avoiding unnecessary burdens on businesses, and any new date will give Companies House at least 21 months notice of the change. The original plan, part of the Economic Crime and Corporate Transparency Act, aimed to make more financial info public, but some people are arguing that it could expose commercially sensitive data for very little gain. In short, businesses can breathe a sigh of relief and keep their financial secrets for now. The EU is keeping an open mind about closer trade ties with the UK, including the idea of a customs union, with the European Commission saying Brussels is ready to chat if the UK wants to explore it. Speaking after high-level talks with Chancellor Rachel Reeves and other ministers, he also suggested most food checks between the UK and EU could be removed, and he left the door open for Britain to join the EU's €150 billion defence loan scheme. While Labour isn't keen on full single market membership or the old customs union, growing pressure from MPs shows everyone's tempted by the potential economic benefits. The discussions, part of the newly formed Quint Group, coordinating UK-EU responses to global uncertainty, are signalling a willingness from both sides to cooperate on trade, security and mobility, though progress is slow. Hopefully this proves that even after Brexit it's possible to be frenemies, at least on paper. And that's a wrap for today. Don't forget to hit that like button if you found this video useful, and as always, subscribe for more updates. Catch you next time.